Happy Wednesday, everyone, and welcome back to another episode of Trading the Markets. I'm Bijan Maleki, and of course, I'm joined by Kris Bullock, aka Blastoplas. If you have any questions, just feel free to drop them in the live chat on X or on platform, and we'll try and get to as many as we can, whether it's a trade idea of yours, a chart you want us to look at, or anything really. Just drop it in the chat and we'll get to it. And it might not seem like this right now because the market has been so boring over the past week or so, but the world really is shifting. We are just absolutely changing. The sector is just changing, and if you're not ahead of that curve, you're going to be falling behind. So that's why Raul recently released a free report that lays out what's changing, where he sees the big opportunities, and how he's positioning his own portfolio for max upside. So the old playbook, that's dead, right? The roadmap to the next financial revolution is here. So make sure you check out the report. You've got 5 years to survive this economic tidal wave. And speaking of changes, you may have noticed that here at Real Vision, we've been working with Sui to transition from Web 2 into Web 3. And we just dropped an episode today. Make sure you check that out. Web 3 in the real world. Damian Horner sits down with Raul and other founders to talk about how they're using Sui's blockchain technology to advance themselves into Web3. So definitely worth a look if you want to see how companies are thinking about that transition and what it looks like. Kris, how are you? Happy Wednesday. What's on your mind?
Doing well, thank you. Yes, it's happy FOMC day today, so we have that to look forward to later this afternoon. And it's funny, in light of that, really, the market is kind of in no man's land. There's kind of nothing going on. It's like there's plenty of stuff to talk about, but at the same time, there's really nothing going on, at least in terms of the charts go. And it's just, I think we're kind of in this spot where we're just waiting for the next big catalyst, which, if we kind of touch on the economic calendar briefly, we can see here that there's quite a bit going on. We've got like I said, we've got the FOMC coming up this afternoon. Tomorrow we've got core CPI, we've got non-farm payrolls coming out on Friday, we've got the PMI update coming out on Friday for the next month. So there's a lot of big news information that's coming out over the rest of this week. I think that will certainly drive the market one way or another. We don't know yet if it's going to be up or down, at least in the short term. We don't know, what Powell's going to come out with. I think nobody thinks there's going to be an interest rate cut yet at this point. That's kind of the general consensus. But of course, it all comes down to his tone in the presser, and is he hawkish or dovish, and what does he see in the coming months? And so that's what it's going to come down to. We'll be obviously anxiously awaiting that. And so in the meantime, there's really just, I think, a couple of big scenarios that could likely play out for Bitcoin, which will then trickle down through the broader market, the broader crypto market. But what I'm seeing here is, as I said, we've been basically just going sideways for like 2+ weeks now, really just consolidating. We've kind of come back up to where the 10 and the 20-day moving average have essentially met up, and where price is basically right there. And generally when that happens, we can also see one thing that really stands out to me is these Bollinger Bands. Like, look how tight they are compared to most of the time. They're hugely spread out here when there's sort of normal volatility happening. And now they're just just teeny tiny, pinched all the way down. So this is signaling a volatility squeeze, basically, which means there's likely going to be a breakout soon in one direction or another. And so what I'm seeing in terms of the directions are thus. Let's look at the liquidation heat map. So earlier in the week on the Monday show, I had called out this big dark yellow cluster here, and this is essentially this would constitute a short squeeze. This would mean there's tons of liquidity up here from people who are short, thus getting stopped out basically by price going up through here. And so as we can see, the biggest chunk of liquidity is to the upside. But over the last few days, it started to get a little bit more intense down to the downside, maybe even down as low as like 112. And so if we kind of take that over and look at the chart, if we notice that 112 level is pretty much spot on perfect with this previous peak here earlier on. It's like 111.8. So what that could mean is it's really going to come down to, are the market makers going to try and drive price down to that cluster and capture that, stop out those initial longs first and trap those traders before running the price up through that short squeeze, or are they just going to run it up? And so there's a couple different scenarios here that we can outline. And basically it would be just as simple as this. We come down, we kind of touch this level, and then we, run up from here, and so on like that. Conversely, if it just wants to go up from here, it would, simply look something more akin to this. I think either way we go up. What the question is, do we come down here and trap those longs first and liquidate them and then run up from here? Either way, I'm bullish overall. I think my bias is to the upside. I think generally sentiment is good. It's just a matter of, do we come down first and bounce, or do we just run up straight from here? I will say too, regarding this heat map. Come on. Regarding this heat map, once we do get up into this range, this is really going to serve to juice the market to the upside. And so it'll help, all we got to do is start dipping into this, and that's going to create a lot of forced buying by liquidating all of these shorts, which is going to, again, juice the price and sort of amplify the gains to the upside whenever this does happen. So again, whether it's this first and up or just straight up from here, remains to be seen. And that's going to kind of probably be somewhat influenced by, again, the economic data and the news coming out over the remainder of the week. Separately from that, in the moment, we can see, based on this funding rate heat map, just looking at this far right sort of column here. So what we're looking at here is, there's on the left axis, we've got all these different assets, and then these are basically dates. And when it's blue like this, or kind of this bluish green, we can see it sort of right in the middle of this color range, meaning that the market is not really, biased to one side or the other. The market is basically very net. It's not like everybody's, overly long or short the market right now. It's just essentially flat neutral. So this is telling us too that there's not a lot going on in terms of actual movement right now, market movement. So what we're seeing is essentially just, this is the playground for short-term traders. This is basically when this is a market maker's dream. These sort of sideways consolidations are when market makers just cash in on people being bored and trading, short-term price action. And most of them are losing, and market makers are raking in cash. So right now, in these long sideways consolidations, this is the time when a lot of people just kind of get chopped up, because they get antsy. They're waiting for something to happen. So they're like, well, I'm just going to go over and trade perps or whatever, and just try and make a few bucks on the side. And of course, market makers know that. And, they're always a step ahead of everybody. And so really, in that scenario, when markets aren't trending, but rather they're just kind of chopping sideways, that's when sort of inexperienced traders tend to flush money down the toilet and just hand it over to market makers. And that's really what we're seeing right now. So right now, it's funny. I really would encourage people to, I know the show's called Trading the Markets, but right now is not the time to be trading the markets. Right now is the time to be going outside and touching grass and just sort of ignoring the markets until we resume some kind of established trend, and then we'll get opportunities to trade. And it's funny, you could say, well, maybe isn't now a good time to buy? Aren't a lot of alts sort of at support levels, which we can touch on here in a second? And the answer to that is yes, absolutely. Many of them are at support levels and probably are at good buying opportunities. But the problem is, we don't really know how this is going to play out yet, and the market hasn't really shown its hand. So I could say, yeah, go buy right now because we're at support levels across the board. But if we get this flush down to say 111, 112 on Bitcoin, and suddenly all the alts that you bought today drop another 10 or 15% before V-shape bouncing out of there, you're going to be cursing me for telling you to go buy right now. So it's just one of those times when you just kind of got to sit on your hands and sort of just wait and see what happens. And that's okay. Sometimes the best play is to do nothing at all. And I think right now that's the situation we're in. So yeah, that's where we're at, basically.
That absolutely is, though, a trade, right? I think, Kris, you've in the chats, you've also talked about your mom who has Bitcoin right now. She's maybe a better trader than 99% of the people here, because she does nothing. She doesn't touch it and just watches her stack grow over time. So there is something to that.
Absolutely. And right now is the time for that. We can, like I said, we can look at a few different alts. I probably want to touch on, I think Ethereum is worth touching on. Like, let's look at that real quick, because one interesting thing I'm noticing is Ethereum is holding up really well, but like a lot of other alts are not doing as well in the moment. I mean, they're not doing poorly. Many of them are still in overall uptrends, but they're maybe experiencing a short-term correction. Whereas Ethereum is basically just trading sideways for the last going on 3 weeks now, and so a lot of people ask, well, because Ethereum's doing well, does that mean it's alt season across the board? Is that is it time to jump into alts and things like that? And cautiously, yes, I will say, but if we look at like others dominance, we can see here, if we kind of pivot over to others dominance isn't necessarily doing great. I mean, it's actually quite down on the week. And so while Ethereum itself is doing well, and that's creating sort of, as we've talked about, an outsized impact on Bitcoin dominance dropping here on this left-hand chart, we can see alts in general are still kind of just doing okay. Now, there are a contingent of alts. There are a selection of alts. Like if we go over and look at the bullmarketsupportband.com website that I've touched on now for a few weeks in a row, we can see that now 62% of the top 100 are in weekly uptrends. So there's definitely plays to be had. There's definitely alts that are outpacing the rest of the market. But the more important point is going over and looking at, hold on, where is it? The alt season index. So of sort of that 68 or whatever that I just mentioned, only say 36 of them are actually outpacing Bitcoin in this moment. And so, or not even that, actually, there's just these handful. And so those are the ones you really want to focus on. And it's real easy to do. All you got to do, look at this site, go over to CoinMarketCap, pull up the altcoin index, go over to bullmarketsupportband.com, look at those. That's your filter. That's your funnel. That's all you need to do is go find what's in the green there, and you immediately filter out 99% of the rest of the market that currently is effectively garbage right now. Those are the alts you don't want to mess with. These are the alts you do want to mess with. So go over, look at this list, and if you're holding stuff that's sort of way down here in the red, ask yourself why, and why are you not concentrating at least on Bitcoin and maybe some of these other ones. We know there's the common ones we talk about all the time. We've got the Pengu, we've got SPX, we've got Hype, we've got ETH. Those are all crushing it. Obviously there's a number of others. One I want to call out that Jamie Coots has mentioned, that's a bit of not an underdog. A dark horse? That's sort of the word I'm looking for. Is Tron. Now it's not super exciting. It's not like a flashy thing that's going to go and do 100x from here. But it's just a steady gainer. Like if we look at it real quick. And I totally get why Jamie added it to his sort of longer term crypto portfolio, because it's just, it's been in a steady uptrend for like a long time now. And so, and like if we zoom way out, you can see it too, but like, it's one of those that's just like, it plods along and it does well. And I think it's a good one to have. Like if you're looking for something that's like a safe, something that's going to go up steadily over time, but isn't, and you don't have to worry about it kind of dropping through the floor overnight or anything. I would put like Tron and XRP sort of in that category of ones that maybe aren't going to, again, no, they're not going to do a 10x from here, but they're just going to steadily cruise upwards. And I think that they're good ones to sort of think about right now. But yeah, outside of that, again, there's plenty of opportunities to be had. Not enough to necessarily move the needle on this others dominance chart yet, because there's not enough of them across the board to sort of outpace Bitcoin overall. But there's definitely enough out there where if you pick your opportunities, you can be crushing it. Like in the model portfolio that I do for the Connect here on Real Vision, I'm way up on Bitcoin right now. I'm up, 20, 30, 40% or something like that against Bitcoin with just, the alt positions that I've had, which is, again, hard to do when you consider that others dominance has been in this major downtrend and hasn't recovered since January. Yet it's proof that there's opportunities out there to be had if you just kind of use the right tools and focus on the right assets, which isn't hard to do. So yeah.
So I want to kind of circle back because we started with an ETH chart. So I want to take this question from Kevin that comes on the platform. Isn't ETH technically still in a downtrend against Bitcoin? If you connect the lows on the weekly from the last couple of years, ETH is still below the trend line.
Well, connect the lows on the weekly over the last couple of years. I mean, well, I'm going to say no. I mean, I see what you're saying, but I think the downtrend is reversed. And I've talked about this before because the main reason I say that is because the 20, the bull market support band, which is the 220-week moving averages, basically has reversed to the upside rather sharply, I might add. Also, we've got the 10-week moving average has crossed up over the 20, and also we've set a much higher high against the rest of the chart for the first time since going back to December of 2021. So I believe we have effectively reversed that downtrend. I mean, sure, yes, maybe we need to still set a second higher high, but I don't call this a downtrend anymore at this point. I feel like we haven't done anything like this structure here anywhere else since this trend began, again, way back in December of 2021. Each time we've tried to come back out of it, it never, was able to set a higher high. It never was able to break this trend. It kept continuously just getting rejected by this 20-week moving average and getting lower and lower and setting new lows. We've reversed that trend. I mean, we've got a higher low here. We've got a higher high here, again, for the first time in 4+ years. So I don't believe we are still in a downtrend against Bitcoin at this point.
Thank you for the question, Kevin. And I also want to, because while we were, on the topic of bull market support band, we were showing all those coins that are outperforming Bitcoin right now. I want to combine Oliver's and Ludovic's questions here because they're pretty similar. Oliver just sold his DOT and he's thinking about what he can enter now. So I definitely think, Oliver, you're going to want to check out those two charts that we showed at the beginning, bull market support band and all the alts that are outpacing Bitcoin for something. But Ludovic says, you had a great point the other day about opportunity costs. Do you think one should just drop Link, AI16Z, Tau, and WorldCoin for Sol, SUI, XRP, HBAR, or ETH at this point? Ludovic, my short answer is yes. But Kris, why don't you take a crack at those?
I mean, again, probably my short answer is yes, too. I mean, really, it comes down to, you just ask yourself, why are you in these assets to begin with? Why are you holding them as long as you have? And, if they haven't reversed by this point, then the odds of them kind of suddenly reversing and rapidly outpacing the rest of the market are much, much lower. I mean, of course, anything can happen. You could win the lottery too, but there's the odds of, as we get later and later into this 4-year cycle, the odds of one of those assets suddenly catching a massive bid and catching up to everything else and outpacing everything else, it kind of gets lower by the day. And so at some point, you're going to have to just kind of cut bait and pivot into the things that are proving to be where the market wants to be right now, and the price action kind of trumps all, basically. And so, yes, and Bijan, like you said, basically, go to those two websites, bullmarketsupportband.com and the alt season index on CoinMarketCap, and just sort of use this as a funnel, use this as a guide to narrow down your selections, and then you can spend some time researching any of these and formulate a thesis for why you feel like you should be in them, or whether you think they're long-term or short-term and things like that. But it's a whole lot easier to research 25 or 30 different assets than it is to research 1,000 different assets. And so just start with these, start by looking at the charts, obviously start with the ones that are doing the best and start working your way down. And obviously you can even go a little bit below Bitcoin here. Some of these aren't quite outpacing Bitcoin in this moment, but generally probably will. Certainly Solana is one of those that I think is on that list. And I think SUI maybe is a little, SUI too, I do think. Potentially some of these other ones too. So don't just look at the ones above Bitcoin, but also don't necessarily dig into these ones that are way down in the red either. This you probably want to stop at sort of break even and just kind of look at that. And this kind of goes back again to this, the bull market support band website here. again, anyone that's in the green here, just start by looking at it. And then some of these have been in the green a lot longer than others. And so some of them are doing much better. So don't just automatically go, oh, well, if it's in the green, that means it's good. Like definitely look, you can kind of mouse over any of these and it'll pop up, it'll populate a chart, or it should anyway. It's not working for me at the moment. But anyway, yeah, it'll populate a chart and then, or you can just go pull it up on TradingView or whatever. Look at the chart, look at the bull market support band, see definitely how well it's doing, how strong the trend is. Like here, I'll just look at on TradingView, for example. Like an example of a good bull market support band is like this Tron right here. I mean, it's well and truly to the upside. It's in a very long-term established uptrend. Like this is something that is a perfect example of something that I would be happy to put money in. It's been in an uptrend for a long time. Whereas conversely, something more like virtuals, for example, it's technically in an uptrend. It's like, yes, by just a tiny margin, we can see the two moving averages are technically pointed to the upside, but this is definitely much weaker of a signal overall than say the Tron chart was. And so it sort of, if you go back to this website, the Tron one is a perfect example of one that you would want to get into. Whereas while technically virtuals is still a green dot here, it's not nearly as strong of a signal overall. So kind of just use that metric to narrow down or refine down your possibilities. And the ones that are likely in the strongest uptrends right now are the ones that are going to continue to be in the strongest uptrends going forward. So that's the easiest way to kind of refine your probabilities and pick winners right now. So yeah.
Great. Thank you guys for the question there. Jake wants to know, or Jake is saying, would love some commentary on SWI if possible.
Yeah. So let's look at the SWI chart. It too is, it's funny. It's a lot more like virtuals, I guess, than say Tron, in that it really only just recently pivoted into an uptrend. But what I do like about SWI is it's definitely recovered. A lot of assets never really recovered from this downtrend. A lot of them came up and just sort of bounced off the bottom side of this support band here and just went on to set lower lows. And SWI sort of well and truly has broken that trend. And not only that, since these lows in April, it actually technically has outpaced Bitcoin. It's not by a ton. Hold on, I've got actually a chart here. I can tell you exactly. It's outpaced Bitcoin by round about 40%. So it's doing better. You're better off in SWI than you are in Bitcoin. Again, had you bought here, you'd be up 40% on this Bitcoin trade. So it's looking good. I like also too that it's worked its way back up into this upper sideways range that it had sort of filled out earlier in the year. It did kind of bounce up here earlier in May, and then it dropped back down, touched its longer term trend line, and then it's back up here again. And it's currently holding support at the bottom side of this range. So structurally, I think it looks really well. I do like too that it's sort of maintained this longer term uptrend. Yes, it got way overextended, way far deviated from the trend line, but it came back down, touched it perfectly at the April lows, came back down, held it as support all the way through this other sort of correction phase that we got kind of during the Iran sort of events that were taking place in the Middle East. The market kind of flushed out then, but it basically held this trend line as support. So it's never really broken down its longer term trend that it started since August of last year. And it's well back above it again right now. And it's in a daily uptrend. The 20-day or the 10-day is above the 20-day. Again, the weekly moving averages are to the upside, and it's holding support on this upper range. So structurally, I think SWI looks really good. Also, we know fundamentally they've got a ton going on. They're getting ready to release their new gaming device. In fact, I had pre-ordered one, and just yesterday I got an email to provide my shipping address. So those are getting ready to drop on the market, and I think that's going to provide some just general sort of attention in their direction, plus just all of the other stuff that they're working on right now. They're doing tons, and there's potentially an ETF coming for SWI. So I wouldn't fade SWI at all. I think SWI looks as good as anything in terms of the larger cap, bigger layer one projects. I put it right up there with Solana, and I think that we know the market cap for SWI is quite a bit below Solana's. So technically, there's more room to the upside for SWI even, I think, and so. Yes, it hasn't been blowing everything away, but it's definitely not rolling over. It's definitely not a stinker, I would say. It's tracking better than a lot of the market, and that it has outpaced Bitcoin out of the lows here. So yeah, I see no reason to not be in SWE right now, honestly.
Fantastic. Great news for those holding SWE. Thank you, Jake, for the question. We have a couple more to get through, so let's hit these. Thoughts on Doge as an indicator of retail interest?
I personally wouldn't use it as such. Well, let's briefly look at the Doge chart, and then or here, I've got it here.
Yeah, I'm with you. I don't even know, like, how many people are even, and if you're someone that's buying Doge, please let us know, because I'm actually curious to know how many people are actually continuing to buy Doge as opposed to maybe chasing some of the more popular memes right now, like SPX, the Pengus, the fart coins. Yeah.
Well, yeah, exactly. So so Doge, yeah, I'm going to say no, honestly, because yes, it's going up, but it doesn't really look as good as a lot of other even meme coins right now. Instead of using this, there's sort of two other things I would use instead. Instead of looking at Doge specifically, I would say look at like the meme coin sector as a whole. And TradingView recently released, I wish it's funny, when they have a new symbol called meme.c, and it's sort of an aggregate of the top of the memes in the top 100, the top memes in the top 100. Some reason it's not working correctly right now. When they initially released it, it went way back really far, but then out of nowhere, it's only going back to like the middle of May. So they need to fix something. But nevertheless, this getting a sense of just the meme sector in general, I think is a much better way to gauge retail sentiment. And so I would more use this, because Doge isn't even necessarily, I think, a top performing meme right now. Like you said, Bijan, the likes of Pengu, even Bonk, certainly SPX, Fartcoin, all those are outpacing Doge right now, and outpacing a lot of things. So looking at the other top memes, I think, is a better way of doing that. There's another chart that I talk about too, called, it's this meme coin gains indicator. And it too, I think, is a really good gauge of general meme coin sentiment. And it's this line here, which we can see has dropped off. But basically, I use this line as sort of an aggregate of the top memes. And then there's a moving average too, a moving average component with it too, we can see. And so we can see memes have generally dropped off a bit right now, which I think is a better indication of retail sentiment. Also, using this moving average, when it drops below these line thresholds here, like we've got a lower line here and then an upper line here, whenever memes tend to drop way below it, that often signals like a really strong buying opportunity for the market as a whole. And then conversely, when it peaks up above these lines, it flashes a red signal here. And that's generally telling us that memes are way overbought, and that generally the market itself is way overbought and really frothy, and just maybe now is it's time to get out. And a lot of times we can see when this signal happens and memes get way overbought, that signals a larger topping event in the market too. So I use this indicator that's sort of driven by the meme sector to help gauge overall retail sentiment, and I think it does a really good job.
Yeah, that's a meme coin gains is a great indicator that we've been using quite a bit here. I'm gonna go for a bit of a hot take here, or maybe it's not a hot take, but I do not think I think Doge is gonna fall outside of the top 10 by the end of this cycle. That is going to be my take there, because we'll see.
I mean, there's every chance SPX could flip Doge, I think.
That would be so great. Please do. All right.
At the rate it's going.
Stefan has a question here. So Stefan, we don't love to give price predictions, but we can definitely take a look at the Solana chart. But here's Stefan's question. Can we get a reasonable Solana price prediction for 2025 year end and 2026 bear market low points? Maybe instead of doing that, we can just kind of take a look at the chart and see what we can take from Solana here.
Yeah, to answer your question, Stefan, no, I can't. No, nobody can. I mean, there literally, if anybody tells you they can, ignore them and don't believe them, because nobody can give you a real prediction on that. Like, the only thing I would say is, if you want to kind of get a general guess, go look at the market cap of something. Look at what would have to happen for it to, say, double or triple or whatever, how much money, how much inflows it would require for that to happen. And then suddenly it starts to become very clear what's most likely. Like, Solana's it's over 100 billion. I think it's 111 billion even, or something. It takes a lot of money for Solana to double, or triple or quadruple. That's hundreds of billions of dollars. And so it's much easier said than done. Now, that's not to say it's not going to go up from here. I definitely think it will. It's funny, this chart looks really similar to the SWE chart we just looked at. And even going back further, in fact, let me kind of zoom out to the weekly on this, because this is interesting. So let me get rid of these Bollinger Bands. They're screwing with it. So this is like the 4-year cycle, the start of the 4-year cycle, sort of back in the end of 2022, and similar to how SWE did, but on a much longer basis. Solana has sort of held this long-term price trend all the way going back to here. I mean, it touched here, it touched perfect here, then it got way overextended, just like SWE did, came back down, touched perfectly at the April lows again, and then again touched perfectly at the more recent lows again too, and is now nicely up off of that trend line again, just like SWE. Also, just like SWE, it's worked its way back up into this upper sideways range and is holding it at support. I mean, these charts are almost identical. It's kind of funny. And also identical is the 20-week moving averages are pointed to the upside. The 10-week moving average is above the 20. So we're in definitely a bullish uptrend right now on Solana, and it looks absolutely just as constructive as SWE does. And if I go back up to this comparison chart here, just like SWE is up on Bitcoin, so too is Solana. Now, granted, it's not as much. It's only up 18% against Bitcoin since those April lows, compared to SWE being up almost 40%. So it's about half as much, but nevertheless, it has outpaced Bitcoin since those lows. So that's kind of all you can ask for, and I think it will continue to outpace Bitcoin for the duration. So I see no reason to not be in Solana, just like I see no reason to not be in SWE for the same reason. So yeah, I think it looks good.
Yeah, and just for reference, SWE right now is at 96 billion market cap. ETH is at...
You mean Solana?
Yeah, sorry. Solana's that'd be great if SWE was, right? Solana's at a 96 billion market cap.
Okay.
ETH right now is at a 460 billion market cap. So what? Between a 4 to 5x for Solana just to catch ETH now. Do you think that is going to happen? I think that's a good question to ask yourself. Another good website I like to play around with sometimes is what's the market cap of? And then you can just, type it in and see like what Solana's price would be for it at a current ETH market cap, right? So that's something you can play around with. It's very hard to give price predictions. Like Kris said, kind of anyone who really is doing that with confidence, probably you don't want to listen to them all that much. I say that as I was telling the Discord yesterday that Pudgy Penguins are going to 50 ETH. I was giving them a price target, but
I think people that talk in absolutes, particularly in crypto, they're immediately not credible to me. Anybody who talks in such absolutes. I'm not saying you with that prediction, Bijan, but just like in general, if somebody comes to you, oh yeah, Solana's going to 500, no question, like without a doubt. Immediately I dismiss whatever they're saying.
No, absolutely. Right. And like, I think the way Raul looks at it is kind of the way we should be looking. He's not looking at price targets. He's looking at time frames. He's looking at the overall cycle, the global liquidity cycle, right? He talks about this all the time. And I think that's how you should think about these things, as opposed to thinking, hey, I need Solana to hit $750. Because that's just what you want, right? That's how you end up round tripping it, because it doesn't hit your price target. You hold on to it, waiting for it to hit your price target, and then before you know it, you lost out on all of it, as opposed to just following the timing of the cycle that we're in and playing it that way. So that's why you should read Raul's report, because you only have 5 years left, right? And the macro investing tool is another great tool that we have that kind of tells you where we are in the cycles. So I think that's a better indicator of price as
Yeah.
opposed to the actual target.
Yeah, I'm so glad you said that, because like you just said, banking on a price target is a surefire way to miss the top, and end up selling way lower.
Absolutely, yeah. Yeah, you don't want to be like me last cycle. I was all
Me
on price
too.
targets, right? I was focused.
Yeah,
I thought ETH was going to hit $10,000 last cycle.
yeah.
Didn't get anywhere
Or
near that.
or
And
Bitcoin at 100.
yeah,
I
right.
was waiting for Bitcoin at 100, so of course I didn't sell in November, because we were at what, 69,000. Next thing you know, it's March and Bitcoin is at whatever 40,000, and game over. You missed it. So yeah.
Yeah, so I think that's a good place to end for today. That was another episode of Trading the Markets, but we are going to be back on Monday for a live TA show in Discord. Kris, what are we? I know you talked about the FOMC meeting coming today. What are you looking for, kind of to end out this week going into the weekend?
Well, I'm still biased to the upside. I do still think that, we end up higher, into August. I think August ends up being a green month. And we're just kind of waiting out this, the next week here. So going back to the top of the show, it's these two scenarios. We either come down to 112 and then bounce from there, or we just bounce from where we're at right now. And it'll largely be dictated by economic data releases, probably, and news events, and whatever else. And I've heard a lot of good catalysts. I mean, certainly we've, MicroStrategy has bought a ton more Bitcoin. There's a bunch more treasury fund announcements came out, over the last 24 hours. Like, there's so much Bitcoin being bought right now. It's crazy. And so, but it's all, of course, happening OTC. So it's not impacting the market price necessarily, but like, eventually we're going to get the supply shock from all of this behind the scenes buying. There's way more buying happening right now than there are new Bitcoin being created. So eventually, all roads lead to the upside, basically. But just, don't get antsy. Don't try to trade this right now. If you do want to trade it, just chip off a tiny stack of your money, chip off 1%, and go and mess around on perp exchanges if you can't help yourself. And be prepared to flush that money down the toilet, honestly, because it's particularly difficult to trade perps in a sideways market right now. The market makers have absolute advantage over you, and unless you're well practiced in this and well skilled and understand risk management and trade management and all of that stuff, you're going to lose money. But of course, if you have fun doing it, I suppose, who cares? It's up to you. But
Yeah.
but it's not my jam, and I'm just going to kind of touch grass and wait for something to happen. So yeah.
All right, guys, we'll see you Monday. Have a great week. Try not to get wrecked. As Rao says, don't use leverage unless you know what you're doing. But
Yeah.
I would not recommend it. Have a great week, everyone. We'll see you on Monday.